Hello and welcome to another Major Market Movements End of the Week market review for August 7th, 2015. I'm Quad G, and in this video we're going to be covering the FX markets, the Dow, crude oil, and the Treasury market as well. We're starting off here with the US dollar. I think there's a good chance that we may have seen the US dollar top out here. There's a 5-wave series to the upside that is looking complete, with the first series, the first one up. It looks like a nice impulse for wave 1, and then we got a B, C for a running flat for wave 2, another impulse up for wave 3, a sharp correction which alternates with the running flat with wave 2. That looks like a sharp wave 4, and now we've got 5 waves to the upside complete with a wave 1, somewhat of an ending diagonal with a wave 1, 2, 3, 4, and now today was 5. And the day also, this is a 4-hour. We got a 4-hour candle today, and that was one of the first things that caught my eye and made me think we better be jumping in on this before it gets going on too longer. There is a chance that it could pop up here and backfill some of the shot up today, reducing the risk of an entry, short side entry. But this whole move does look complete. It's coming right up against a key trend line. Elliott wave count looks complete, which we'll get into in a moment. So all looks pretty much ready to go for a downside move. You can see we got a really nice outside key, or not outside key reversal, inverted hammer candle on the daily, and that seals in the, or sets a key top anyway, right here at the high at 98.33. So a nice low risk backstop for a potential short. The QG3 on the US dollar is still open to the upside. So we're still bullish there. The weekly tries to close as a inverted hammer candle on the weekly. On the EWO, we do have a slight negative divergence here between these two swing highs compared to the oscillator. So it's a negative divergence in the EWO. And this is supposed to be a USD here, or RSI, excuse me. Let me put that on real quick. So RSI also producing a negative divergence there after coming up above the 60, and now we're coming back down through the 60 into the 40 to 60 zone. And that went away too. I don't know why I did that. Hold on a minute. The MACD on the daily is closed out as neutral. And the weekly is still in a negative divergence to the downside. Or not divergence, but alignment to the downside. So US dollar is looking like it may have topped out today and is ready for a slide to the downside. So I want to take a quick look at some of the other FX pairs that involve the USD and see what they may be doing. Here's USD CAD, the Canadian dollar, USD compared to the Canadian dollar. And what I'm seeing here is a wave 1, wave 2 sharp that looks finished. Wave 3 could be finishing here and maybe ready for a wave 4 pullback that I think could come down here, maybe to the 2800 handle, maybe fill in this manic move to the upside as the lowest part of wave 4. But since wave 2 looks sharp, wave 4 may be just a sideways choppy move for a while, sideways, before giving a final fifth to the upside that I think could eventually reach up here to the 3400 handle. So there's a little bit of potential for a short here, but it may not go very far. It may only come down here to the 2800 handle, and it would definitely need to keep above the top of wave 1 here at 125.60. So if that was to break, then we've got some oddball movement here, because that would only confirm that we have 3 waves up and not 5. So we'll see what we get there. The USD JPY. Looks like we got this impulse up. We got 3 waves down. What looks like 3 waves up so far. So it makes me think this is an A, this is an extended B, and we're pulling back into what could be either a running flat, maybe only coming down to possibly 123.50, or it could extend down further. Could come down to 122. That's another possibility as well. But it does look like part of a corrective move, and not part of a significant or a major top. The QG3 is still in a bullish alignment to the upside. You can see the Bollinger Bands are starting to pinch here, so some energy is building up for a move, an impulsive move maybe to come. The week does close as a inverted hammer candle, setting a key top at the high at 125.07, so potentially bearish there. While below that, possibly just for that C wave move. Could it be something more significant than just a corrective C wave move? Maybe, but as far as Elliott wave terms are concerned, it wouldn't make much sense, really. All right, and let's move to the euro. Euro, do get this hammer candle today. Not in the best of positions, however, though it does set a key low at 108.55. A little bit more exciting is the fact that we do close back above the 20 DMA there. The QG3 moves into a neutral position from bearish to neutral, so things could be turning around there, and also the Bollinger Bands are starting to pinch, which is an indication that this is building up energy for a potential impulsive move to come. The weekly does close as a hammer candle, setting a key low again at 108.47. We're still, we're well over 100 ticks above that. So not the best low risk entry potential. I prefer that this market come back down a bit to get into a better position, a lower risk position before jumping in on it. And the other thing that I don't particularly like about this, it's okay, but I would prefer that things are different, is the fact that a bottom right here is still well away from any significant trend line breakouts. So I prefer to see some kind of trend line breakout with bottoms. That's my preference, but you don't always get it, and we may not get it here either. And we're still range bound in this 40-60 range with the RSI. MACD on the weekly is still open to the upside, and on the daily it's open to the upside now too. With today's close, we tick back up with a bullish alignment to the upside on the MACD. So it's looking potentially bullish there. The Aussie dollar could be turning around here too, but maybe just a very short jaunt to the upside. Because what I'm seeing here as I back out is this move down here from the 81.50 level coming down here. This looks like a wave 1. This looks like a wave 2. Wave 3 could be finishing here, and we could be just working on a wave 4 jump up, maybe filling in some of this manic drop, possibly up here into the mid, roughly the 7,500 handle for a potential top. So we're sitting at 74.15, might be coming up into the mid 7,500 range. There's just not a lot of potential there. 100 ticks. It's just not something that I want to chase after right now. I'd like to see how this plays out. We might just get a choppy sideways corrective move for a while, and then one more final fifth to the downside, and that would be far more exciting to see a little pop up, some corrective move right up here, and then one more wave to the downside for possibly a final fifth. That might be an excellent spot to get in on the long side for potential midterm bottom, maybe even a long-term bottom. You can see here that the daily is the MACD, or not MACD, excuse me, the QG3 is into the price has moved up well above the 20 DMA, so that's no longer resistance, and it could be challenging the upper Bollinger Bands here soon. A bullish alignment looks pretty likely, possibly very early next week, so that would be bullish as well. The weekly does close as a bullish harami, confirming a bullish harami. You got several weeks to the downside. Last week was a small-bodied positive candle, and now this week comes up and closes above the previous negative candle, almost the previous two negative candles, closing above that. Anyways, that sets a key low for at 72.33. Again, I think this is a good foundation for a potential wave 4 correction to the upside. Obviously, if we come up here and this move is to come up and challenge 78.48 anytime soon, that would change the picture significantly. Unlikely to get our fifth wave to the downside. Maybe moving up significantly higher much sooner than previously thought. So EWO not really showing anything. RSI just in the middle of right there, stuck in the 50 area of the RSI, so that's very neutral. The MACD on the weekly is still bearish, still open to the downside in the weekly, but on the daily here we're wide open to the upside, and that looks bullish. So some bullish potential here, potential bottom for AUD, but don't expect it to go real far. The mid 7500 handle may be as far as it gets to finish off wave 4. I looked at Great British Pound previously. I don't see anything real significant there just yet. We do. I would take a quick look at it, but there is a potential triangle pattern here with an A down, B up, C down, D up, and now this could be a wave E to the downside, but so far it's not. If that is true, we're just not seeing the bottoming action just yet, so really nothing to do with it right now. Let's take a look at the Dow. All right, so the Dow here continuing to sell off. It looks like a B wave to the downside so far. It could be something more drastic, but for now, it does look to me as though we have a wave A and then an ABC down for wave B. And so we may get one more pop up maybe next week and do a wave C, maybe a running flat, wave 2 possibly next week. But if that's true, I would say, let me look at the day here. We've got, yes, wave C may give us maybe two to 3 days to the upside and then turn back around. And then there is the possibility of a major capitulation coming up, either starting next week or the week thereafter. Let's look at crude oil. Crude oil, not sure where it's heading. Well, I do think we could be touching 42, but the LE wave count, there's nothing popping up here that's really standing out as being finished or complete yet. So I think it's best to just kind of leave it alone for now, but keep watching it. I do think there's a double bottom potential right here at 42, but we just got to give it more time. The week closes in the bottom 10% of the weekly range, so I would expect more selling going into next week for crude oil. EWO on the daily, we don't quite have a positive divergence set up there yet. Neither in RSI do we have positive divergence set up there yet. However, we are deep into this into the 20 level of the RSI, and you can see how in previous downtrends, once we started getting into the 20 range, uh, this would be the as you start to build up a positive divergence, this would be the time to be looking for a place to get into the long side for potential bounce. So same thing here. I think it's best to just wait and see, watch for the positive divergence to build up at this oversold level, and then we'll get in on the inside or to the long side. But for now, nothing really to do with it. My MACD went away again here. MACD on the daily is open to the downside, and the weekly is going to be as well open to the downside on the weekly. All right, so it's crude's still looking very bearish. Alrighty, let's move to the Elliott wave charts here. All right, here's the U.S. dollar. Here's the longer term count all the way back here into mid 2014. We've had this move to the upside, and just as expected with a final fifth up here, triangle thrust move, final fifth. We got in short here and had some really nice runs to the short side in this market. And we've been kind of holding off lately with USD, looking for another potential topping action with a wave 2, potential subwave 2, and we may have just gotten it today. As you can see here, we got this inverted hammer candle on the daily at the end of that 5-wave move that I showed you previously. So it looks like it's ready to cave while below that level. Plus, if we go to this chart, you're going to see that the trend line that connects the origination of the first wave 1 down with wave 2 here, that trend line was tested today, and we see the rejection. So as long as we stay below 98.33, this very lazy move to the upside looks like it's ready to be retraced very quickly to the downside. So if we break up above that level and get a daily close above that blue line, then our subwave 2 potential gets shrunk to a point that it may not play out, and it's probably not worth doing anything with, and it'd be best to be flat because you could get a short squeeze to the upside if that was to take shape. Here's the Dow. This is a double head and shoulders pattern that I talked about previously. This shoulder ended precisely where I expected, and we've seen a sell-off since then. We've now come down here and we've have broken below the neckline of this pattern. It may not capitulate right away. There's still a chance it could bounce up, but a straight off capitulation would not be too surprising either. Let's take a look closer at it. Here's the LA wave count that I favor right now. Is we've got wave 1, wave 2, sub 1, sub 2, another sub 1, and now I'm working on the final sub 2 as a potential running flat here with an A up, an A, B, C down for wave B to the downside, which may finish today, and then the expectation is to see a small move up, possibly for wave C as a running flat, in which case the 38.2% Fibo there at 17,608 could be a potential resistance level, and allow for our wave 3 of 3 of 3 to the downside to finally come to fruition. There is still a chance that this could expand, be an expanding flat instead of a running flat, and potentially come up here to the 61.8% Fibo at 17,786. But I don't think that's as likely as the running flat. All right. All right. I wanted to point out that this trend line, this little orange trend line here, connecting these two lows, that if you do see the price come down and break below that orange trend line, that's more than likely a sign that you're going to get capitulation in the market right away. It's just going to fall to pieces sooner than expected. But for now, while we're above that orange trend line, I think this just could be an extended B to the downside, and we still could get a wave C up. And let's go on to the 10-year note here. It's a long-term count. Got the zigzag diagonal to the upside that's finished. It took about 12.5 years to develop that one, and now the expectation is for an impulse to the downside that'll come down and completely retrace that ending diagonal, coming all the way down here to the 93 handle. If we zoom in a little closer, here's that wave 2, and I think we're working on major wave 3 to the downside with a wave 1, sub 2, sub 1, sub 2 that may have completed here underneath this blue trend line, and we're just getting a little bounce up, and we'll zoom on this section in the next slide here. Here's your C of 2 here is relates to here, this top. So we're just zooming right in on that. We got this initial impulse to the downside. Looks like standalone after a previous 5-wave move up. So you got 1, 2, 3, 4, 5 up, and then you got 5 down. So you got a 5-5 reversal here that usually can produce a workable top for shorting. So my expectation is that we may be seeing a double zigzag to the upside here with an ABC X and then an ABC to come next week, and then a turnaround for what could be a very major run to the downside, wave 3 of 3. We're talking this run right here. Third wave to the downside could be, the bulk of it could be coming underway right now, and we could be just sliding heavily right into 2016 from this point. So very serious dump in the treasury market. For that to happen, well, I mean, one thing that's, this may be a little bit esoteric in nature. Well, Elliott waves are pretty esoteric, but this is what I'm about to tell you here is kind of taking the conventional wisdom and turning it on its head. Generally, investors are looking at the news, they're looking at what they're seeing in the world, and they're using that knowledge to somehow translate it into the charts to determine, well, I see that Saudi Arabia is doing this, so I think this is what I should do with the oil market. I should go long, go short, or whatever, and then look for the technical clues as kind of as an assistant to making a trade based upon what you're seeing out there in the real world. Okay, so you're taking what you're seeing out there in the real world, considering that first before considering how to look at it from a technical standpoint or applying a trade. All right, and that's 95% of us out there are looking at it in that fashion. But let me give you another idea. Why don't you take that whole thing and flip it on its ear, flip it upside down, and why not take what you're seeing in the technical aspects of these markets and then come up with what could potentially be happening in the world based upon that technical information. All right. I hope I haven't lost you there. You're following along. So let's just say that my technical analysis is correct. And I'm totally blind to what's out in the world. I don't watch TV or the radio, listen to the radio or whatever. Let's just make that basic assumption, okay? If I was just looking at these technical charts in the dollar, the stock market, and the bond market, what kind of scenario would need to take place in the world for all three of those to take shape as I see the potential? All right, so let me go back here to the dollar. All right, um, I'm looking I'm looking for a potential wave three of three to the downside. A major drop in the U.S. dollar. Okay, all right. Well, that's fine by itself. That would probably boost. It could boost the stock market. It could boost. I mean, if I was just looking at it by itself, um, you know, the conventional wisdom is, if the U.S. dollar drops, it's gonna. It means there's liquidity coming into the market and marketplace. Boosting commodities, boosting the stock market, and what have you, right? Um, but a drop in the U.S. dollar too could cause a drop in the Treasury market too. Is because the Treasuries are based in U.S. Denominated um, uh, currency, um, a drop in that currency could adversely affect what's happening in the bond market. Um, So by itself, yeah, U.S. dollar could cause a boost in the stock market. A drop in the dollar could cause a boost in the stock market, or commodity markets, and maybe drop the bond market. Okay, that's fine. Now let's take a look at the Dow. Um, but what if we take a drop in the dollar with a drop in the Dow? How does that make any sense? If that was to take place, um, would that, typically when you get a drop in the stock market, you see the bond prices and treasury note prices move to the upside, right? That's what happens in a typical move such as that. But what if the dollar goes down and the stock market goes down? Typically, when that happens, it means that um, foreign investment is probably moving out of the stock market and moving into other instruments as they back out of the stock market, which is also dollar denominated, and repatriate their funds into usually into their home currency. Um, okay, so now we got the dollar going down, we got the stock market going down. So how does it make any sense for the 10-year the treasury market to be going down in price all at the same time? What in the world would have to take shape for all three of those to go down at the same time? And what would the possible outcomes be? And the only thing I can think of why all three of these markets would be going down in a very strong manner all at the same time is, um, there's the potential of something very disastrous to happen to in the United States of America, probably some kind of black swan event um, that we can't even picture right now that um, would be, with all three of those dumping, you got this trifecta of calamity. Something major would have to take shape to force all three of those down. And of course, if all three of those are moving down, all that capital's got to go somewhere. I mean, typically, if you got the stock market going down, you get a lot of investors moving to cash. So that's going to boost your U.S. dollar. But if the U.S. dollar is going down with the stock market, that wouldn't make any sense. Also, with the U.S. dollar, with the stock market moving down, you get a boost in the Treasury notes as investors move to what they consider a safer investment, right? But if the 10-year note's moving down, that doesn't make any sense either. So where would all that capital be going? Well, the only thing that really makes sense is for gold and silver and other commodities potentially to move to the upside. Um, as investors are kind of skittish with paper investments and they want it to move into something more tangible, something they can actually see and put their fingers on, and that can be actually useful in the moment other than holding on to pieces of paper because, let's face it, US dollar, it's just paper. Stock market, it's a paper representation of the performance of, of stocks, of individual companies, and the bond market really is just it's a paper representation of the stability of the United States and its ability to pay back its debt, right? So what would cause all three of those things to be under threat, under pressure? Um, I don't know. I'm sure your imagination could come up with all kinds of scenarios, but not to panic anybody or get everybody all freaked out. Just I just want to give you a different perspective. That sometimes looking at the technical, uh, what's going on technically in the markets, can lead you to envision what's got to take shape in the world for that to happen. All right. So anyway, enough of that for today. Hope you all have a great weekend, and we talk to you later. Adios.